Hey guys, welcome back to another live stream, 242 back to back. Today we're going to take a closer look at Meta Platforms. The company just reported earnings. So, how we're going to start this off is first just take a closer look at the highlights from their press release. Then, in about 30 minutes, we have the earnings call. So, we'll listen to the earnings call and I'll just kind of do more of like a commentary take during the Q&A session and when the company and when management kind of discusses what's happening during the quarter right off the bat, right? I haven't really taken a closer look at, but I know I've been on Twitter. Everybody's going crazy. They're talking about this massive buyback happening right now for Meta. We can see stock prices up roughly $27, up 17%. Definitely a pretty interesting time. So let me just kind of get everything set up. But I just want to say hello to anybody who's watching. I know yesterday we had a great live stream with AMD's earnings. Hopefully, we can do the same today with Meta Platforms. So just let me know in the chat how everyone is doing, and let's kind of get this started. Give me one quick second. I'm honestly shocked, right? I am kind of shocked that we see this kind of results after hours. What's going on, Q? How's it going? Q, I haven't seen you in a while. Obviously, always appreciate the support, man. Hope everything's going good with you down in Georgia, I believe, right, Q? But let's see what we have. In Q, I know I believe you're a big bull here in Meta, right? I know you were a big bull in AMD, so I'm pretty sure you were super happy today with AMD up over almost 10%. I believe over 11% today. And I do believe you're also a Meta Platforms bull. So I think you should be happy right now. I want to see, before we take a closer look, how a company like Google might be doing. That's the great thing, right, Q? Always happy. Obviously, to be expected. Other kind of advertising companies, we see Alphabet up 4% right now. I'm gonna guess Trade Desk is also gonna be up a nice amount. Trade Desk up roughly 3%. Unity platforms, which is now kind of a big advertisement play in the gaming side. I want to see how they're reacting. Yep, they're also reacting after hours, 2.3%. So we can see a nice amount of nice moves for the advertisement market. You guys know I'm super excited about Meta, about Unity, so I'm happy to see these stock prices up at the moment. So let's take a closer look. Let's go to Meta. Like I mentioned, their earnings webcast is going to start at 2 p.m. Pacific time, so I believe that's 5 Eastern. So in about 30 minutes, let's take a closer look at the earnings release and the slides while we wait for the overall earnings report. So let's start off with the slides. Actually, I think this might give us a better picture right off the bat. So if we take a closer look, the advertisement market, okay, it did take a nice growth quarter over quarter. We are seeing that the overall U.S. and Canada, which has been kind of flatlined for quarter one, quarter two, and quarter three, did take a nice jump here in quarter four of 2022. The other thing we're seeing is, even though the rest of the world, and I am going to guess because of foreign exchange rates, the rest of the worlds are down. We can see here Europe is down about $1 billion. We also see Asia Pacific down roughly 200 million, and the rest of the world is up 100 million. But we can see it's pretty much flat, US and Canada. So it does seem like advertisement is back, at least for quarter four. The advertising spending was still pretty strong. So I am liking that right off the bat in forms of their advertising revenue. What over here? Revenue by users, geography. What was the previous one? That was advertisement revenue. Okay, pretty much the same here. Nothing too crazy. If we take a closer look at their segment results, we can see the other market is still roughly, it's down quarter over quarter. It is up a bit year over year. I do believe it's to be expected. I don't think many people were probably planning on purchasing a VR too much, but at least it is some growth compared to a year ago. What else do we have? Expenses. I'm just trying to take a closer look at some of the things I normally look at. Net income. So this is another important one in my opinion. I do believe many were expecting this trend to continue, this downturn trend, but it does seem like it might have found some bottom. And I do believe this is what a lot of companies are going to start doing, right? They're going to start to find, they're not trying to burn that much money. They're trying to find a bottom. I do believe it's good news that, hey, quarter three, quarter four, kind of picture that bottom. maybe they continue to increase in efficiency and we start to see that go up over the upcoming quarters. We might hear a little bit more about that in their press release. Diluted earnings per share, pretty much the same thing here. Capital expenditure, this was to be expected. This is I feel like this is where Meta gets a lot of hate, where they're spending too much money on things like VR, AR. But I want to say this is a huge technological company. They have a huge engineering team, even though obviously a lot of probably engineers got laid off in the past few quarters, which sucks. Regardless, they are developing a lot of products with artificial intelligence. They need that capital expenditures for data centers, for their networking switches, for infrastructure solutions. So I do believe this is something we're going to continue to see a trend of. But but what I am expecting is something to. I want to see what they forecast for 2023. What's going on, AZ? Good numbers overall from Facebook. Happy as a shareholder that they are taking measures and are becoming leaner. That's definitely good, right? AC trends are good. Waiting for the call since interesting updates were they shared in the last one. I agree, AC. That's where we hear a lot about more the hours of their products. We might hear a little bit more of how well Rios is doing. I do remember in the last earnings call they talked a lot how the messaging to advertisement market is growing, especially on WhatsApp. And I see how you mentioned that here, how especially on WhatsApp for business and Reels. So I do believe we get a lot of great feedback from them in the earnings call, and that's what I'm super excited in the next few minutes. You are, so AC, you are disappointed still by Oculus revenue trend. Definitely, right? I mean, I don't know if I want to say I'm disappointed. I didn't believe it was gonna shoot up like no to like that. I didn't think it was going to be a huge grower. I'm just happy they're still in this market one way or another. I haven't really given up in there. So family daily active people, we can see a nice growth quarter over quarter, a nice growth year over year. Pretty impressive. Family monthly active people, same thing, up year over year, up quarter over quarter. I want to say I don't think I was personally worried about people not being on Facebook. I think this is such a bearish case that really doesn't make sense how Facebook is for the older people. Instagram is loosely into TikTok, but I feel like every quarter and quarter we continue to see this growth on all their kind of active platforms. Family average revenue per person is seems to be down a bit year over year, but it's kind of seeing that growth quarter over quarter. I'm guessing they're going to explain some of the changes here, why they are down a bit year over year. So now this is another one I want to see. So Facebook daily active users, rest of the world is up. Asia Pacific up a little bit, Europe up a little bit, and this is something that was kind of hurting them a little bit. We remember that quarter two and quarter three were really impacted by the Ukraine and Russia war, where they started to see a bit of a decrease in certain European parts. That's why we saw quarter two see a decline from quarter one. That's not the case here. They are seeing a bit of growth in Europe. Pretty impressive. And look at that. They are also seeing growth in the United States and Canada. I wouldn't be surprised if this growth is driven by their short form content, where now more people are like, hey, okay, I can just sit on Facebook or Instagram with their reels is now my new TikTok. So it's okay if I come back to this platform as well. So I think we might hear a little bit about that, but I'm happy to see Facebook daily active users up on a quarterly basis. What else do we have here? Facebook monthly active users, again, growth pretty much in growth overall, growth in rest of the world, flat on Asia Pacific, small downturn on Europe, and pretty much flat US to Canada. So let's see, Facebook average revenue per user. Nothing here too crazy. Sorry, just taking a quick sip. So let me know, guys. Let me know. Right now, Meta is up roughly 18% as we are doing 17% as I am recording this. Are you guys, is Meta Platforms one of your top, I want to say top 5 holdings, top 10 holdings? I do believe for me it's one of my top, at least top 8, maybe even top 7. So I'm super excited here for Meta, obviously, and the kind of solution and the kind of tailwinds is bringing to some of my other companies like Unity, for example. Right now it's up roughly 1.5%, and we see Trade Desk up roughly 3%. Even though I don't know Trade Desk, we also see Alphabet up roughly 3.7%. So pretty bullish news for Google. I do believe they report tomorrow. So what else do we have here? I just want to take a closer look at some other products. Boom, boom, boom. So look at this. So free cash flow is improving a nice amount. Q top three. Q, what is your other? What are your other top two and your top three, if I may ask? So free cash flow up a nice amount. We do see overall revenue did increase. It's not like they slowed down on. They did get a nice amount more of net cash provided by operating activity, so that was a big driving force. It seems like they're still spending a nice amount on property and equipment, and other stuff. So it's not like they're slowing down too much. It's more that they got a little bit more cash based on that growth in revenue. What else do we have here? So that's it for their presentation. Super excited. A nice Q, BYDDY, and Google. All right, so now let's take a closer look at their press release. Like I mentioned, their earnings call will happen in roughly 25 minutes. We are going to listen to that live, and we can definitely discuss in chat what's happening with the overall earnings. But we can see right off the bat, Mark says, our community continues to grow, and I am pleased with strong engagements across their apps. Facebook just reached a milestone of 2 billion daily active users. The progress we're making on our AI discovery engine and Reels are a major driver of this. Beyond this, our management theme for 2023 is the year of efficiency, and we're focused on becoming a stronger, more nimble organization. So, I mean, again, I feel like when Meta changed their name to Meta outside of Facebook, so many people were just focused on this company really investing in the metaverse. But I do believe from the beginning, I've done plenty of videos where this is more of an investment to artificial intelligence, and artificial intelligence was going to be a huge push for them for that discovery engine and from other solutions in their advertisement space. So I believe that's been a great move, and it does seem to be paying off one way or another right now. So let's see what else we have here. Um, do, 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 do. We already kind of talked a little bit about about some of the graphs we saw here. The ad impressions per ad. Ad impressions delivered across their Facebook app increased 23% year over year. The average price per ad decreased by 22% year over year. So that's what we're expecting, right? The ad market is still a bit weak. So even though they are, I'm guessing now because they're being monetized in maybe some of their shorts, they're able to increase that ad impression delivery. But some of those kind of advertisement solutions are not as expensive as some of the other ones. So we can see the price per ad decrease. Anything else here? Share repurchase, they repurchased roughly 6.9 billion and 20 that all right. So they repurchased 6.9 billion and 27 billion of our class A common stock in the fourth quarter and the full year of 2022. Bought a lot of shares. This was to be expected. I do believe they took out some debt earlier on, and they did mention that was going to be one of the portions. As of December, they have roughly 10 billion available and authorized for repurchase, and they just announced today a $40 billion increase in their share repurchase program. That's a lot. That is definitely a lot. It does seem like Meta still believes their shares are selling at some form of discount if they're willing to continue to increase that buyback. They do mention cash and cash equivalents right now sitting at roughly $40 billion and total long-term debt of roughly $10 billion. So we can see company's cash balance sheet is nothing to worry about at all. If you guys are looking at the press release and the presentation, is there anything right now that has kind of shocked you, that it's not shocking, or some concerns at the moment? If we take a closer look at headcount was 86,000, up 20% year over year. Our report headcount includes a substantial majority of the approximately 11,000 employees impacted by the layoff. Oh, excuse me. that they announced in November 2022, they will no longer be reflected in our headcount by the end of the first quarter of 2023. Okay, so that headcount is going to drop. Unfortunately, they did have to lay off about 11,000 employees. And I want to say this is probably one of the biggest things that we're going to probably hear about, and we're hearing this a lot from big tech, right? We saw Microsoft kind of lay off 10,000 employees, and then we also see them kind of putting so much money in other investments. Here we're seeing kind of a headcount decrease in Facebook, but then they're off obviously buying about opened up announced $40 billion increase in share repurchase authorization. So I can definitely see why, if I'm gonna look online tomorrow, I feel like some of that is gonna be the headline in certain articles. So they talk a little bit about restructuring. Let's see what they mention. So they took several measures to pursue greater efficiency and to realign their business strategic priorities. This includes consolidation strategy to sublease, early terminate, or abandon several office buildings under operation leases. So they are okay. That's to be expected, I guess. A layoff of approximately 11,000 employees across family of apps and reality labs segments. In a pivot towards next generation data center design, including cancellations of multiple data center projects. That's not that you guys know I'm a huge semiconductor market investor. Not that excited about that right there. They did mention that they are canceling multiple data center projects. If we remember yesterday, AMD did announce that, hey, they are seeing some weakness in the clouding market. I wonder if this is some of that weakness, and if in the upcoming quarters, maybe not by the kind of huge cloud providers like AWS, like Google Cloud, and like what you call it, who's the other one? Microsoft, Azure, whatever. We're gonna start to see more enterprises and more of these big players do this. The ones that don't have this as a main player, are gonna start maybe reducing some of their data center projects. That might be bad news for Nvidia, as the company does report in the upcoming month on February, I believe. So what else do they mention? The restructuring charges recorded under our FOA segments: 3.7 billion, 400 million during the fourth quarter. Blah blah blah. Nothing too crazy here. All right, so let's look at the outlook. Now, I think this is where things are going to start to get interesting. They expect the first quarter total revenue to be in range between 26 to 28.5 million dollars. What did they give us this quarter? I didn't even look at that. So this quarter's revenue was boom 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 32 billion, and they expect about what, 26? What did they give us? 26 to 28.5. So on the mid range, it would be higher than quarter one of 2022, or about flat, right? Pretty much flat, I want to say. So nothing too scary here. It seems at the moment pretty much flat. I would have expected, with the stock price reaction, that maybe their outlook looked a little bit better. But I guess not that bad is the new good, right? Because it doesn't seem, I don't think it was the perfect outlook, but we can see after hour prices are roughly 17% up right now. What else do we see? They anticipate the full year 2023 total expenses to be in range of 89 to 95 billion. They lowered it from their prior outlook of 94 to 100 billion due to the slower anticipated growth in payroll expense and cost of revenue. All right, that's to be expected, right? They're still spending a lot of money, right? We now expect to record an estimated 1 billion in restructuring charges due to the compensation and consolidating of some of those offices. That's to be expected as well. Now, one look at capex. We expect capital expenditure to be in the range of 30 to 33 billion, lower from our prior estimate of 34 to 37. The reduced outlook reflects our updated plans for lower data construction spend in 2023, as we shift to a new data center architecture that is more cost efficient and can support both AI and non-AI workloads. Now, this is what I want to listen to in the earnings call. What is this new data center architecture that they're going to be discussing? We're most likely going to hear Mark talk about that. I am curious to see how NVIDIA is reacting to the overall news. And uh, if I had to guess, right now Nvidia stock price is down roughly 1%. I think that is the worry, right? This is the worry right now that, hey, this company's capital expenditure is a little bit lower, a nice amount lower, roughly, I want to say close to 10%, maybe 8% lower than previously expected. They are reducing their spending on data centers, and that definitely would impact a company like Nvidia. At the same time, this company ran up 7.2%, so it can just be the overall volatile market that is seeing at the moment. AMD down 0.67%. Let's see what else do we have here. Mm-hmm. All right, so interesting, right? I do believe we're going to get a lot more information during the earnings call. Nothing too crazy here. I just want to see that cash flow. Like we mentioned, current cash and equivalents, they have a nice amount. They have roughly $40 billion at the moment. Not much long-term debt outside of that $10 billion. The cash flow from operations was roughly 14.5. Share-based compensation was a little bit higher. Did up the increase that. I want to see if there was anything crazy here. Nothing crazy in my opinion. But we can see abandonment charges for data center assets. That was a way that they increased that kind of net cash flow from operations as well. So, guys, let me know in the comments. Do you guys think this 17%? What do you think is driving this 17, 18% growth? Is it that revenue wasn't as bad as many might have expected? Or do you think it's mainly on the overall company's cash flow being a lot stronger and that repurchase program that they have? Because I mean, I think these results are pretty much more like, hey, look, we're not a dying business. We have plenty of cash flow, right? We saw that free cash flow of roughly $4 billion in their earnings, right? I think that's how much it was. Free cash flow. Net income is still profitable. Their overall platforms is still growing, even though not by much. They're still growing. And yeah, free cash flow of roughly $5 billion compared to quarter 3 being pretty much flat and quarter 2 being $4.4 billion. So I think this is just saying that, hey, the worst might have passed Meta at the moment, and maybe that's what the market is reacting to right now. But I would definitely love to hear your thoughts, guys, on what you guys think Meta, what could be the main driving force for Meta at the moment. Did any other big companies report today after hours that we can kind of take a quick look at before the earnings call? Right now, what is trending? So we have Meta trending, obviously, up 20% on the day with the previous highs as well. We have DraftKings is up 10%. The Qs is up 2.9. SoFi is up another 7%. Peloton's up 26%. I don't think there was anything too crazy. Any other major earnings this week that I can remember? I mean, today. I think tomorrow we have a big tech, but today I don't think there was anything outrageous in forms of. Uh, yeah, we had Meta. Nothing else, right? I don't know if any of you guys follow any of these stocks. I think maybe in the semiconductor market, silicon time might be something. I mean, if you're into insurance company, Allstate and MetLife. I honestly didn't even know Allstate was a public company. That's how much I don't pay attention to that. Aflac also reports um, also reported today. Take a closer look. So, are there any earnings, guys, that you guys are excited about for this week, or that you guys were excited? I think AMD was super popular. We definitely had a nice amount of people here yesterday for AMD. We can see. Let's see. I mean, stock was up 12% on the day. I think my portfolio was finally super happy. So we can see Meta platform still up 18% at the moment. We are gonna have to listen to that earnings call and see what everybody discusses. But what are some of the headlines? Facebook. Let's see what CNBC says. Meta exceeds estimates for revenue in its fourth quarter earnings report. The company provided a forecast for the first quarter suggests that revenue could rise from a year earlier should result come in at the top of the range. The stock source. AC, what's going on? So Facebook is doing a really good job in leveraging AI, monetizing WhatsApp, and overall adapting to the changed market dynamics. The VR and AR thing is just on top. I agree, AC, right? I do believe this AI push is something that's helping them execute dramatically, especially in their advertisement side. So AI is good. Like you mentioned, they are monetizing WhatsApp a lot better. They mentioned in the last earnings call that that was one of their fastest growing markets. The WhatsApp to messaging, WhatsApp to ad or WhatsApp to shopping. I forgot what they call it. Advertisement solutions was one of their largest growing markets, and that overall messaging to ads was another. The overall market there was a huge grower for them. I don't think. I mean, I think the VR and AR is gonna. It's just a thing on the top. I agree, AC. The execution in Reels, AI models, and Reels is excellent right now and will pay out sooner than later. Agree. I mean, we are already seeing kind of even YouTube with YouTube Shorts already starting to do short monetization. I'm pretty sure Meta has kind of started that already with certain ways, but I know they're trying to improve ways to improve that monetization value for Reels. So I want to kind of see what. All right, so revenue was 32 billion. So revenue did be it does seem like it did be a nice amount, right? It did seem like revenue was expecting around 31.5. It got about a 32 billion. Daily active users also be by about 10 10 million. Yeah, 10 million, right? Yeah, 10 million. So definitely good. Monthly active users was not a beat though. Average revenue per users did kind of beat overall. Doo, doo, doo. Let's see. I'm not gonna lie. I'm a little sad about their decreased spending and capital expenditures for data centers. But I want to know what this data center architecture that is intended to be more cost efficient is going to be. Because, like we saw, this is the AI has been a huge push for them. Um, I want to see if they might have discussed it earlier on. I don't know if you guys might have been familiar. Oh, here we go. So there was on December 15th. All right, let's take a closer look. Have a few minutes for the earnings call, but I think this might tell us. So Meta rethinks its data center design for AI powered future. It's revamping its data center design to optimize for artificial intelligence and pausing construction to rescope a number of its projects. We look at this strategic shift and potentially connection to Meta's plan shift to liquid cooling. That's pretty interesting. I mean, if you guys have been watching the Semiconductor podcast, make sure to subscribe. The link is down below. I'll post it on the chat real quick. I want to get to 620 subscribers by the end of this stream. So let's see if we can get there, guys. I'm at 616. All I'm asking is for 4 subscribers at the moment. Actually, I'm at 613. All I'm asking is for 3 subscribers to the podcast for the Semiconductor. We have discussed this kind of liquid cooling. So I'm definitely gonna read a little bit about this data center change. hmm So it does seem like many knew about this data center halting. I don't know why this is my first time reading it, but it does seem like many people knew in early December. Do, 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 do. It's crazy how Meta has 18 data center campuses around the globe. You don't really think about that. You don't, I feel like many people just think of data centers and think of the big players like Amazon, Google, and Microsoft. But a big player here like Facebook has a nice amount of data centers. All right, they don't explain. I might have to read this later because it is a big read. Um, we have about 7 minutes. Let's see if the call is getting started soon. Webcast. Boom, 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 boom. Register as guest. Toot, toot. All right, it hasn't started yet. Let me know when it starts, guys, because right now there's music. I don't think you guys can hear the music, right? I don't think you guys can hear chat. No, you guys can't hear it right now. So, I mean, let's just take a quick look again at stock prices. I don't think anything is going to change until we hear that earnings call. Right now, up 18% still. I'm pretty sure we are seeing they are doing a huge authorization on repurchase program. Definitely a good thing. Free cash flow was pretty high this quarter compared to last quarter. We are seeing their users continue to grow. So I'm super curious to see how their platforms are doing right now. So if we take a closer look, other advertisement companies like Google up 3.7%. I think tomorrow, now I feel like I'm getting worried of how excited I am about my portfolio. Usually, when I get excited about my portfolio, it means things are coming to an end soon. But we can see AMD is down roughly 0.4% at the moment. Nvidia is down roughly nothing. All right, so it does seem like this news doesn't really impact them with the data center slowing down. Trade Desk, TTD is up roughly 4%. Unity stock, I can't wait for Unity to report earnings, is up roughly 2%. Is Snap? I know Snap reported this yesterday or this morning. This morning. So it was down 10% on the day based on their earnings. Um, but they're up 1% after hours. What's going on, Duck? Long time no see. Long time no hear. Hope everything's good. Right now, taking a closer look at Meta Platform's earnings. Seems like earnings were good. 18% up on the day. They are doing a strong repurchase program. Revenue beat expectations. Positive, a nice positive in free cash flow. They also mentioned they're slowing down a lot of their expenses, even into data center. They're reducing some of that capital expenditure for 2023, and that they're seeing growth in their users in all their platforms. So, pretty much a great quarter. Up 18%. I guess the market was still kind of doubting Meta for a long time. So in the next few minutes, Meta is expected in about 4 minutes. Meta is expected to kind of do their earnings call. Once that goes on, I'll put the volume up here so we can listen to the overall call. Right now, there's just music background. And guys, if you can, one thing to overall help with the YouTube algorithm, if you can just make sure to hit the thumbs up and just type Meta on chat. If everybody can type just Meta one time on chat, it can kind of help with kind of the engagement on the live stream and can definitely push it out a little bit more. So if everybody can just do me that quick favor of just hitting the thumbs up and just typing Meta really quick, I do believe it can help with the overall engagement for the stream. And I promise, I won't do too much talking during the earnings call. So if all you guys can do that for me really quick, or Dodo, that's fine. That's perfectly fine. VHHN. A D. Thank you, Meta. Appreciate it. Surely, Meta. Thank you. Appreciate it. I'm gonna thank you all you guys personally. But right now, still waiting for the call. They're just playing music at the moment. Thank you, thank you, Dodo. Duck, I don't know why it didn't want to let your message go through, so I just put it through instead. But yeah, so I mean, pretty excited. I think for earnings tomorrow, we do have some great earnings. I don't know if I should do a live stream. Depending on it, we have Amazon, we have Microsoft, and we also have Apple. So maybe I could just do a quick live stream covering all three instead of just covering one stock. I did think Meta, since it's the only one today, was going to be the best call for the day. Boom. I do hope they start on time because I'm getting tired of this elevator music they have on their presentation. Meta has taken quite a hit though, right? Um, oh, Amazon, no Microsoft. Yes, Amazon, Google, and Apple, I believe, right, Jojo? I know it's three tech giants. I know Microsoft happened already, but Amazon, Google, Alphabet, and Apple, the three A's. Crazy market, right? This used to be $1 trillion company at one point last year. Crazy how the market works, right? Yeah. It went from a trillion to at one point I believe it was like close to 200 um 200 billion. And I mean it's insane, right? In the past 6 months if you were able to pick up at the bottom, you're already up 72%, not counting the 18% up right now. I do believe this is pretty impressive about dollar cost averaging. Helps out with stuff like that. Just out of curiosity, F is I just want to see. I know Facebook is a big portion, or Meta is a big portion of their portfolio. Yeah, Meta Platforms is 5.9%, so that's definitely good. And Microsoft was also good. Duck, we're rich. We did it. We just we're back to being loaded. I wish. Boom, boom. Man, all right. It still hasn't started. It should go live soon. What materials do they have here? No materials. So I can't play the music right now because if I do put the music, YouTube will demonetize me, even though it's just some random elevator music. But once that's done, I'll put it up and you guys tell me how the volume is from the desktop. Guys, while you're waiting, I just want to hit 620 on my semiconductor podcast. If you haven't subscribed, the link is on the comments. Semiconductor channel where I just discuss semiconductor, nothing else, just semiconductor. I'm looking for 3 more subscribers by the end of this live stream. So please do that. I would definitely appreciate it. All right, it's 5:01. I just want to make sure this does mean, yeah, that is 3 p.m. 5 p.m. Making sure. I didn't want to wait for another hour thinking messing up my time slots. Come on. I do like their earnings call though. Their earnings call is definitely pretty impressive. They do share a lot of great insight. I feel like other companies, when you look at their earnings or when you hear the earnings call, they just kind of talk what's in the. Oh, here we go. Wait.
At this time, I would like to welcome everyone to the Meta fourth quarter and full year 2022 earnings conference call.
Can you
All
guys tell
lines
me
have
how
been
the volume
placed on
is?
mute
Is it
to
too
prevent
loud?
any
Too low?
background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press the 1 then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ms. Deborah Crawford, Meta's Vice President of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' fourth quarter 2022 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Javier Olivan, COO, is also on the call and will join Mark and Susan for the Q&A portion. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. Now I'd like to turn the call over to Mark.
All right. Hey, everyone, and thanks for joining us today. 2022 was a challenging year, but I think we ended it having made good progress on our main priorities and setting ourselves up to deliver better results this year as long as we keep pushing on efficiency. And I said last quarter that I thought our product trends look better than most of the commentary out there suggests, and I think that's even more the case now. We reach more than 3.7 billion people monthly across our family of apps. On Facebook, we now reach 2 billion daily actives and almost 3 billion monthly. The number of people daily using Facebook, Instagram, and WhatsApp is the highest it's ever been. Now, before getting into our product priorities, I want to discuss my management theme for 2023, which is the year of efficiency. We closed last year with some difficult layoffs and restructuring some teams, and when we did this, I said clearly that this was the beginning of our focus on efficiency and not the end. And since then, we've taken some additional steps, like working with our infrastructure team on how to deliver our roadmap while spending less on CapEx. Next, we're working on flattening our org structure and removing some layers of middle management to make decisions faster, as well as deploying AI tools to help our engineers be more productive. As part of this, we're going to be more proactive about cutting projects that aren't performing or may no longer be as crucial, but my main focus is on increasing the efficiency of how we execute our top priorities. So I think that there's going to be some more that we can do to improve our productivity, speed, and cost structure, and by working on this over a sustained period, I think we'll both build a stronger technology company and become more profitable. I'm very focused on doing this in a way that helps us build better products, and because of that, even if our business outperforms our goals, this will stay our management theme for the year, since I think it's going to make us a better company. Now, at the same time, I'm also focused on delivering better financial results than what we've reported recently, and on meeting the expectation that I outlined last year of delivering compounding earnings growth even while investing aggressively in future technology. Now, next, I want to give some updates on our priority areas. Our priorities haven't changed since last year. The two major technological waves driving our roadmap are AI today and over the longer term, the metaverse. So first, let's talk about our AI discovery engine. Facebook and Instagram are shifting from being organized solely around people and accounts you follow to increasingly showing more relevant content recommended by our AI systems. And this covers every content format, which is
Does seem like volume went out. I'm just gonna try to refresh. I wonder if it was, if it's on their side or on our side. One quick. The AI is coming for Mark. Is anybody listening to it on their own and got the same thing? Where's Mike? You guys hear me? I don't know if I'm down right now. I don't think so. Twitter's up. All right, let me try to fix this, guys. BRB. What a failure. What? Sure. All right, if you can hear me, it's definitely not lost you guys. Right? That's AI is coming. It seems. Can anyone try going to their investors relations website and tell me if it's working for you guys? Not working for me. Try from another browser. Good call. Good call. All right, I think I got it. So
is to deliver better social experiences than what's possible today on phones. And the value of MR is that you can experience the immersion and presence of VR while still being grounded in the physical world around you. We're already seeing developers build out some impressive new experiences like Nanome for 3D modeling, molecules and drug development, Archeo for architects and designers to create interiors, and of course a lot of great games. The MR ecosystem is relatively new, but I think it's going to grow a lot over the next few years. Later this year, we're going to launch our next generation consumer headset, which will feature Meta Reality as well. And I expect that this is going to establish this technology as the baseline for all headsets going forward, and eventually, of course, for AR glasses as well. Beyond MR, the broader VR ecosystem continues growing. There are now over 200 apps on our VR devices that have made more than $1 million in revenue. We're also continuing to make progress with avatars. We just launched avatars on WhatsApp last quarter, and more than 100 million people have already created avatars in the app. And of those, about 1 in 5 are using their avatar as their WhatsApp profile photo. And I thought that was an interesting example of how the family of apps and metaverse visions come together. Because even though most of our Reality Labs investment is going towards future computing platforms, glasses, headsets, and the software to run them, as the technology develops, most people are going to experience the metaverse for the first time on phones and then start building up their digital identities across our apps. All right, so those are the areas we're focused on: AI, including our discovery engine, ads, business messaging, and increasingly generative AI, and the future platforms for the metaverse. And from an operating perspective, we are focused on efficiency and continuing to streamline the company so we can execute these priorities as well as possible and build a better company while improving our business performance. And as always, I'm grateful to our teams for your work on all of these important areas, and to all of you for being on this journey with us. And now over to Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q4 total revenue was $32.2 billion, down 4% or up 2% year-over-year on a constant currency basis. Had foreign exchange rates remained constant with Q4 of last year, total revenue would have been approximately $2 billion higher. Q4 total expenses were $25.8 billion, up 22% compared to last year. In terms of the specific line items, cost of revenue increased 31%, driven mostly by a write-down of certain data center assets, as well as growth in infrastructure-related costs. R&D increased 39%, marketing and sales increased 4%, and G&A decreased 7%. Operating lease impairments and employee-related costs were the largest contributors to growth for all three expense lines. However, growth in marketing and sales was partially offset by lower marketing spend, and growth in G&A was more than fully offset by a decrease in legal-related expenses. We ended the fourth quarter with over 86,400 employees, which includes a substantial majority of the approximately 11,000 employees impacted by our previously announced layoff, who remained on payroll as of December 31st due to applicable legal requirements. We expect the vast majority of the impacted employees will no longer be captured in our reported headcount figures by the end of the first quarter of 2023. Fourth quarter operating income was $6.4 billion, representing a 20% operating margin. Our tax rate for the quarter was 24%. Net income was $4.7 billion, or $1.76 per share. Capital expenditures, including principal payments on finance leases, were $9.2 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $5.3 billion, and we ended the year with $40.7 billion in cash and marketable securities. In the fourth quarter, we repurchased $6.9 billion of our Class A common stock, bringing our total share repurchases for the full year to $27.9 billion. We had $10.9 billion remaining on our prior authorization as of December 31st, and today we announced a $40 billion increase in our stock repurchase authorization. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 2.96 billion people used at least one of our Family of Apps on a daily basis in December, and that approximately 3.74 billion people used at least one on a monthly basis. Facebook continues to grow globally and engagement remains strong. We reached 2 billion Facebook daily active users for the first time in December, up 4% or 71 million compared to last year. DAUs represented approximately 67% of the 2.96 billion monthly active users in December. MAUs grew by 51 million or 2% compared to last year. Q4 total Family of Apps revenue was $31.4 billion, down 4% year over year. Q4 Family of Apps ad revenue was $31.3 billion, down 4%, but up 2% on a constant currency basis. Consistent with our expectations, Q4 revenue remained under pressure from weak advertising demand, which we believe continues to be impacted by the uncertain and volatile macroeconomic landscape. The financial services and technology verticals were the largest negative contributors to the year-over-year decline in Q4, but both have relatively smaller shares of our revenue. Growth remained negative in our largest verticals, online commerce and CPG, though the pace of year-over-year decline in online commerce has slowed compared to last quarter. The largest positive contributors to year-over-year growth in Q4 were the travel and healthcare verticals, though both are relatively smaller verticals in absolute share. Foreign currency remained a significant headwind to advertising revenue growth in all international regions. On a user geography basis, ad revenue growth was strongest in rest of world at 5%. North America was flat, while Asia Pacific and Europe declined 3% and 16% respectively. In Q4, the total number of ad impressions served across our services increased 23%, and the average price per ad decreased 22%. Impression growth was primarily driven by the Asia Pacific and rest of world regions. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing surfaces and regions, lower advertiser demand, and foreign currency depreciation. While overall pricing remains under pressure from these factors, we have continued to make improvements to our ads targeting and measurement that we believe are driving more conversions and better returns for advertisers. Family of Apps other revenue was $184 million in Q4, up 19%, with strong business messaging revenue growth from our WhatsApp business platform, partially offset by a decline in other line items. We continue to direct the majority of our investments towards the development and operation of our Family of Apps. In Q4, Family of Apps expenses were $20.8 billion, representing 81% of our overall expenses. Family of Apps expenses were up 23% due primarily to restructuring-related expenses and growth in infrastructure-related costs. Family of Apps operating income was $10.7 billion, representing a 34% operating margin. Within our Reality Labs segment, Q4 revenue was $727 million, down 17% due to lower Quest 2 sales. Reality Labs expenses were $5 billion, up 20% due primarily to employee-related costs and restructuring-related expenses. Reality Labs operating loss was $4.3 billion. Before turning to the outlook, I'd like to discuss our work to grow profitability by scaling monetization and improving our operational efficiency. There are two primary levers to increasing monetization: growing supply and growing demand. Growing ad supply gives businesses more opportunities to get in front of people, and we are focused on enabling that in a couple of ways. First and foremost, we remain focused on building engaging experiences for the people who use our apps. We are coming into 2023 with a strong foundation as Reels continues to scale, and we're seeing in-feed recommendations contribute to engagement as we help people discover new content in their feeds. We will continue to invest in making these experiences best in class. The other side of growing supply comes from more effectively monetizing the surfaces within our apps, including those that have a lower level of ads today. In the nearer term, ramping Reels monetization remains a primary focus. Over the longer term, we see opportunities to continue improving Facebook and Instagram monetization while also scaling revenue contributions from our messaging platforms. Growing advertiser demand is the other focus, and a big effort here is around continuing to drive advertiser performance. While we're still contending with the broader macro uncertainty and signals landscape weighing on advertiser demand in the near term, we're making good progress on our roadmap and are already seeing improvements to ad performance and measurement from the investments we've made. We see opportunities for continued gains in the near and medium term, with our AI investments powering a lot of this work as we continue to improve ads ranking and enable increased automation for advertisers to make it easier for them to run campaigns and use our systems to optimize their performance. Another opportunity we have is to further scale on-site conversions through products like click-to-message, lead ads, and shop ads. Click-to-message ads continue to grow quickly, and we believe they're bringing incremental demand onto our platform, with over half of click-to-message advertisers exclusively using click-to-messaging ads on our platform. We see further opportunity as we continue to scale click-to-WhatsApp ads and are investing in growing newer formats like shop ads. Over the long term, we're investing heavily in AI to develop and deploy privacy-enhancing technologies and continue building new tools that will make it easier for advertisers to create and deliver more relevant and engaging ads. Moving now to our efficiency work. We took significant actions in 2022 to operate more efficiently. In Q4, we made the difficult decision to lay off employees while deprioritizing certain projects and curtailing non-headcount related expenses. We've applied the same scrutiny to our physical assets. We identified opportunities to consolidate our office facilities, and we have streamlined our future data centers to a new architecture, which we believe will be more cost efficient and more flexible that provides us optionality to support both AI and non-AI workloads. In Q4, we recorded $4.2 billion of total restructuring costs in connection with all of these efforts and expect there to be some additional costs in 2023 in areas like office facilities impairments as we continue this work. As Mark has said, these actions are just the beginning of our efficiency efforts, and we remain keenly focused on this in 2023. We are working across the company to deprioritize lower ROI work, move faster, increase productivity, and reduce costs across the business. As part of this, we are carefully scrutinizing our hiring needs, actively reevaluating projects, and reducing management layers. I'm confident that our company-wide focus on efficiency will position us to be an even more productive organization going forward. Turning now to the revenue outlook. We expect first quarter 2023 total revenue to be in the range of $26 to $28.5 billion. Our guidance assumes foreign currency will be an approximately 2% headwind to year-over-year total revenue growth in the first quarter, based on current exchange rates. Turning now to the expense outlook. We anticipate our full year 2023 total expenses will be in the range of $89 to $95 billion, lowered from our prior outlook of $94 to $100 billion due to slower anticipated growth in payroll expenses and cost of revenue. We now expect to record an estimated $1 billion in restructuring charges in 2023 related to consolidating our office facilities footprint. This is down from our prior estimate of $2 billion as we recorded a portion of the charges in the fourth quarter of 2022. We may incur additional restructuring charges as we progress further in our efficiency efforts. Turning now to the CapEx outlook for 2023. We expect capital expenditures to be in the range of $30 to $33 billion, lowered from our prior estimate of $34 to $37 billion. The reduced outlook reflects our updated plans for lower data center construction spend in 2023 as we shift to a new data center architecture that is more cost efficient and can support both AI and non-AI workloads. Substantially all of our capital expenditures continue to support the family of apps. On to tax. Absent any changes to U.S. tax law, we expect our full year 2023 tax rate percentage to be in the low 20s.
Hopefully an analyst ask what the new data center architecture
we
is.
continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. In closing, 2022 was a challenging but pivotal year for our business. We made important progress on our priorities and have taken significant steps to improve our efficiency and productivity. We are set up well to build on this work in 2023 as we continue investing for future growth while remaining focused on delivering strong financial performance. With that, Dave, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch tone phone. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. Your first question comes from the line of Brian Nowak with Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, the first one's on generative AI. Sort of wanted to dig a little more into how you think about, your blue sky potential user and advertiser use cases of generative AI, and how do you think about the timeline for when we can first see some glimpses of those on the platform? And then the second one for Susan, just any more color on the new data center architecture and how we should think about the long-term capital intensity of the business, whether it's CapEx per minute, CapEx per DAU. How big of a long-term benefit could this change be to the overall cash flow? Thanks.
Yeah, I can start with generative AI. I think this is a really exciting area. And I'd say, the two biggest themes that, focused on for this year, and one is efficiency, and then the kind of the new product area is going to be the generative AI work. We have a bunch of different work streams across almost every single one of our products to use the new technologies, especially the large language models and diffusion models for generating images and videos and avatars and 3D assets and all kinds of different stuff across all the different work streams that we're working on, as well as over the long term, working on things that could really empower creators to be way more productive and creative across the apps and run a lot of different accounts. So I think there's some really exciting stuff here.
Heck again. The one thing I wanted to hear about the whole day. I saw it. All right, guys, my bad. It seems like I'm having technical issues. I'm gonna have to cancel this right now. I'm sorry about that. This is the second time. I think it might be better off to just kind of listen to the call by itself. So I'm sorry, guys, for the overall technical, not so what's happening here. But my apologies. I'll catch you guys